Thanks for joining me again. And maybe you're applying for a mortgage and you've got a hefty car payment. You're trying to figure out whether you can qualify. Maybe you were just talking to a lender recently and they said you didn't qualify because you've got a car payment or a car loan. So I thought I would take this time to explain to you what the challenges are and how it works and how the process works when it comes to weighing in your car payment into the mortgage qualification process. Virtually every mortgage program is going to require the lender to look at your debt to income ratio, your DTI. And each mortgage program has various limits on how much DTI, what percentage is the highest amount the lender can allow. Now, what the DTI is debt divided into income. And the debt part of the calculation really has a major impact on the ratio. In fact, for every dollar of debt you have on your credit report, a monthly payment, you need to make almost 3 times as much to offset that. So that way it doesn't impact your mortgage qualification. So for example, if you have a $300 car payment per month, you need to make an extra $900 a month on average to cancel that $300 car payment out. So that way it's almost inconsequential and doesn't really matter against your ratios. So that's significant. So that's over $10,000 a year in additional income to offset a $300 a month car payment. So if you're unable to make that extra income, you need to understand how much a car payment impacts your buying power. So I'm going to be looking right here at the web page where we have this all outlined. But for every $100 in car payment that you have, that means you're going to qualify for, on average, $25,000 less of a total mortgage. So if you were potentially approved for a $200,000 mortgage before you got into your $100 a month car payment, now you're likely only going to be approved for $175,000. $200 a month means that's about $45,000 less of a mortgage you can afford. $300 a month means it's about $70,000 less you can afford. A $400 a month payment, which is fairly common, it's about $90,000 less that you can afford for a mortgage. It's significant just to own a car. If you are considering buying a car and you're also at the same time thinking you might apply for a mortgage, I would urge you not to buy the car right now. Please don't. If you're doing both right around the same time, get the house first. Once you have the house, go to the car dealer. Go on the same day if you'd like. After you close on the loan for your home, go down the road and go get your car. Car dealers don't care. You need a Pulse, and that's about it. They're going to give you the car loan. Maybe not even a Pulse anymore. Dead people might be able to get the car loan for all we know. It's easy, but if you reverse it and you get the car loan first, it's very difficult to qualify for the mortgage that you want unless you have higher income and your income's high enough where it doesn't really matter, okay? So if you do have a car payment and you're concerned that you can't qualify, the best thing to do is speak to a really good lender who understands what to do and to how to overcome that challenge. If you need help finding a lender, I can help you to find that. Just follow the link into the description below and the first pinned comment. I'll help you to find a lender who can work with you despite having a car payment. They'll look at your other things on your credit report, try to figure out a workaround to squeeze out as much as they can from an approval process for your mortgage. So once again, it's not impossible to qualify for a mortgage with a car loan, but it's definitely going to reduce your buying power, and there might be a few things that you can do to overcome that. Thanks again for watching, and I hope you have a great day.